Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss earnings reports of banks, Treasury yields, this week in the market, and more.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity Dips,
And Hugh, honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, October the 19th. We're actually recording this on the day of around mid-market hours. And currently, you're seeing SPY around 369.55. Had a big push at the beginning of the week. Starting to see it get a little rocky. But I mean, from starting at high 350s, low 360s, I mean, we definitely made a move up, especially after hitting that 355 last week. What do you think kind of made this pop? I know we talked about the earnings reports of the banks coming out and a lot of other factors, but I mean, that's a big start to kind of start the week off.
I mean, earnings are always, huge. And especially when they start off with, the banks and tech, it's almost like we kind of get the hard asses out of the way early. But they can really change everything up, especially like when the market wasn't as volatile as it is now, and especially like when I first started. I mean, earnings were the catalyst. We could be trending up for 2-3 weeks, and somebody has bad guidance, and the market just completely changes the trend, or vice versa. And so that's why I always like earnings. And I think we're just in a different environment now because like the newer traders have never really been inside that world. You know what I mean? But with that being said, banks came out, Netflix came out. I mean, Netflix, just to start it out, excuse my language, mother. Netflix boomed after hours. It is up, as we're recording this, up 14%. And at one point it was closing on up 20%, which is pretty incredible. Now, did it wash away the gains? I mean, the losses from the last earnings report, not even close. But it's a pretty good start. You know what I mean? Did you play any Netflix or no?
Not Netflix. I mean, I kind of got burnt off Netflix. I kind of put on my no trade list for a while after what it did to me. Its first shitty earnings reports. I didn't think it'd go down that much after the first one. But no, what did you kind of see in Netflix that made you kind of trade it?
No, so I didn't trade it.
Okay.
I didn't trade it. In fact,
I mean, it's up 15% today. I mean, that's 30% in the past 5 days.
Yeah. No, I mean, Netflix has been, they killed it.
And still down 55% in the past and year to date. Yeah,
exactly. It's still down huge. But so for me, I have no interest in trading this up here. It's still down massive on the year. And it just continues to, make moves that aren't, in my opinion, are not easy to trade. They killed earnings, which we'll kind of go through real quick. It's just not something that I'm not chasing that up there. And then today, I guess you could have bought the dip, the dip was viable, but really no interest, I would say, for myself. Maybe in a week or two, if it's still showing relative strength versus the market, then I might be interested. But with yesterday, they had a lot of new analysts report to come out for Netflix. Just to recap their Q3, Netflix beat estimated earnings by 45%, reporting an EPS, earnings per share, of 3.1 versus 213. That's pretty good. Revenue was up 443 million from the same period last year. And then last quarter company beat on EPS by 0.24, which followed by a 7% increase in the share price the next day. So with this massive move, you'd expect larger than a 7% move, which is what we saw. They do pretty well. Now, the only thing I'll say is that inside like this recap that we just talked about, it said revenue was up 443 million. The only thing with that is that they do 7.4 billion in revenue every year. So like a $400 million increase, that's good, but that's still nothing like that's not really like doing anything crazy in my opinion for myself. It's still down because quarter 2 2022 it was 7.9 billion. So realistically, like it's still down. You know what I mean? And that's the only thing is that I would like to see like a $1 billion increase. Because then it's like now that's starting to make a dent. You know what I mean?
Yeah, for sure. So moving forward to like the overall market, I mean, you're seeing these bigger jobs. You're seeing it starting to get choppy today. Where do you kind of see the future of it going? I mean, we kind of always have these levels. You make these levels every day. Do you have any ones that are going a little further out on this one?
I mean, for me, I'm pretty much watching this 375 area. I really think that is really tough resistance. And I'm actually, I think that we could be looking at a retrace down and maybe even, like nothing crazy, but 360, I think is probably where I'm aiming for. 360, maybe even 350. Now, if it breaks down from there, then shiz is really going to hit the fan and we could be looking at like 320 by December. But at least for now, I think, that 375 is just, acting as like kind of like that brick wall. And I could see a world where, we retrace through the end of the week back down to, 360, 358 area. Yeah. Especially with earnings coming up that we have coming up. Oh, that didn't make sense. Earnings coming up that we have coming up. Especially with earnings, today is, what's today, Wednesday?
Yeah, that's today.
Thank you, sir. So Wednesday, after close, we have Tesla. Obviously that one's going to probably shift the market around. For sure. Tesla's probably going to move the market. That's really the only one that I really see as a market mover today. IBM potentially, but IBM's kind of like, IBM's old. They're the old homie now. And then Thursday before the market opens, we have American Airlines and AT&T and the Blackstone Group. So those are and Nokia, I guess, we could say that we're watching. So for me, I'll just run through a few of the setups while we're doing this. And then, obviously this episode will be out before Thursday's earnings. But for me and Tesla, I really have been staying away from this one just because after I caught that large short down, I just really didn't see a world where it really looked like a good amount of fun. Like the risk to reward just didn't look like it was there. So for me on this one, right now the range is like 229 to 203. That's pretty much the big range. And like the smaller range, I guess you could say is like 213 to 224. So it's like a 9-point range there, 5%. And for me, if it does break below 209, I could see a short down to 200 and then 193. But other than that, I don't really have an interest going long because then it's like you're getting into like a really choppy area. If it does break out over 229, you can scalp it to 235, but I just don't see like the risk to reward in that one. You know what I mean? That's for Tesla. And all of these I'm looking on the 20-day, 1 hour. And like I said, I just don't see the same risk to reward in Tesla as we saw earlier, And so the Tesla I'll probably be staying away from. But as we talk about the overall market, it definitely can, as we talk about the overall market, I mean, it definitely will affect the market, one way or the other, depending which way it swings. Then Thursday before open, like I said, we have American Airlines. AAL. Now, AAL, this one kind of interests me because it's really rallied kind of inside the past month. And what I mean kind of, I mean like 20%, which is still pretty good, Now, with this one, I actually am interested in this, especially if we start to sell off here end of day. The range right now is 1381 to 1430. If we break below 1379, I would take a short down to 1320 and then down to 1266. That's what I would be looking for. Yeah, that's what I'd be looking for American Airlines. That's probably the only interest that I really have in it. Especially it being a $14 stock, I'm only looking for a dollar or two move. But, that would interest me for a quick scalp.
Yeah, and you're already seeing it up 15% in the past 5 days. So, and can you repeat those levels one more time for everyone?
Yeah, so I'd be looking for like 1379 to break to the downside, and I'd be looking at 1329 to cover some, and then the rest at 1266. If we get that
if you
far.
hit 17, I mean, I think you definitely have a good bit down of like 50% almost, not 50, but around 40% going downwards.
Yeah, no, exactly. So that's pretty much what I'm looking for.
And that's tomorrow at 8:30 Eastern.
Yep. Yeah, before in the morning. Yeah.
All right, so we'll watch out for that as well. And one thing we've been seeing, or at least I've been seeing, whenever we're looking up topics for the market, it was always saying when it comes to how good the bank's earnings reports were and everything, it always followed up with, but the market is shaky because of Treasury yields. There's always where everyone's optimistic, but Treasury yields this, Treasury yields that. We always talk about, inflation and Fed meetings and everything. And it seems like it doesn't matter how much good news that comes out. There's always some bit of bad news kind of lurking in the macroeconomics of things. What is the importance of Treasury yields when it comes to all this?
A lot of people are talking about Treasury yields recently because of a few headlines that have come out. And the headlines that have come out have all been that the 60-40 portfolio has gotten killed this year, which the whole point of the 60-40 portfolio is that if the market goes down, your bonds go up. When the bond goes up, when the market goes up, your bonds are going to go down. That's part of it. Okay. Is that like a 60-40 is just supposed to be like extremely conservative and you're not supposed to get smoked. So when you get smoked on it, like this year, I think the average 60-40 portfolio is down 23%. That's when it's like, okay, what is happening? Because my hedges are also going down. That's not how it's supposed to be. Let me just find it real quick. So 4 days ago, and I'm reading this from the Northman Trader. I follow him. I like him. Worst 60-40 portfolio performance year to date in 100 years per Bank of America. Yes, so far worse than 1929, 2.5 months left in 2022. So, and I'm looking at it, and like we said, is that, it's down, I think about 25%, I think is the 60-40. And when I look back, 1929 was 30%, but then, you had 1937, which was 20%. And then you had 1967, which was, like 12%. And then other than that, nothing's been close. Like the portfolio, the 60-40 portfolio is never really had bad years. And what I mean by bad is they're barely ever red. So for them to be, extremely red. I think they're down 30-35% this year. That's the scary thing, because not only because they typically hit the benchmark of the 9%. And so for them not to hit the 9% benchmark is considered quote unquote bad. You know what I mean? So I think that's really interesting about how bad it is doing. But like the guy said, we have 2.5 months left. So who knows? Maybe something makes a comeback, or, and that kind of plays into like when I think about like American Airlines and I think about some of the other stocks that have earnings reports, a lot of them, like their operating expense is going to be incredibly higher, which is not great. And that's going to kill earnings. And that's what we saw during the pandemic. But I think we're still going to see it overlap. Like remember like last quarter when it was like Walmart, stuff like that. Which brings me to AT&T, who also has earnings before open tomorrow, unless you have something else.
So I was going to continue with Treasury Yields just for one more little bit, just because even when you look up what is the Treasury Yield, first sentence is Treasury Yield is the effective annual interest rate that the U.S. government pays on one of its debt obligations expressed as a percentage. At first, I'm thinking, damn, $20 trillion. I mean, that's got to be no matter how small that percentage is, that's going to be a good bit. But then next sentence is put another way, Treasury Yield is the annual return investors can expect from holding a U.S. government security with a given maturity. So I was kind of wondering, like, why would that be a bad thing for the investors? It says Treasury yields don't just affect how much the government pays to borrow and how much investors earn by buying government stock. They also influence the interest rate consumers and businesses pay on loans to buy real estate, vehicles, and equipment. So is this more of just more interest rates that people are having to take on, and it's not just the people, it's the government as well?
Yeah, no, definitely. That's a huge part of it. And honestly, like, see, this is the issue with like when we talked about 8 months ago about how we're just giving out so much money, more money, that this would come back to bite us. This is one of those areas, because what we should be doing is lowering interest rates, not having to heighten them. Or raise them,
right?
And so that's like the real difficult part here is, and I don't even know how many cycles this will take to really fix itself.
Yeah, it's starting to look more like a 2024 thing than the originally expected like end of 2022.
Yeah,
seems like this delay has got like I don't think many people, I feel like a lot of the smarter people expected it to last this long, and then so many people just were looking at the market and were like, no, dude, we are in the clear.
Yeah, no, we're good. And all of a sudden, Marty just gets smoked. Yeah, exactly.
So I guess, yeah, for sure. But going on to this week's earnings report, as you were talking about.
Yeah, so the next one I wanted to look at was AT&T, because they are also before open on Thursday. Wow, it's already Wednesday. That's crazy. All right, so AT&T, this one, similar to American Airlines, where you see this range, but right now it's a lower price stock and it's rejecting that area. And so for me, if it were to get below 1545, I would look for a quick scalp, but honestly, I couldn't see me scalping lower than 1528. It's got to be like one of those quick ones.
Yeah.
But, that's one of those things where it's just got to be real quick. I just want to get in, catch the flush, get out. Because again, these lower price stocks, you're not going to be catching like you're not going to be catching like $5 moves on this. $5 moves would be a 40% drop. So for AT&T, no real interest long, but short underneath 1546 down to 1528 is probably what I'd be looking for.
And why do you say for a lot of these, you're not looking for the biggest move, you're looking for quick in and out? I know you said it's about the price, but like what's making it a quicker move? Are these just not something you'd feel comfortable in playing in earnings report and holding them in? Or is this more just solely due to the price?
Yeah, no, I mean, it's pretty much like where it's at over the last 5, 10, 15 days. I feel like there's more opportunity to the downside. So if I did have to hold it, down, or, if I had to hold it against me, I would have I just know myself, I would have a lot more of conviction to the short side than to the upside. And so knowing myself and knowing that, I would, that's why I'm not going to buy a breakout. You know what I mean?
Yeah. Are you looking at any other earnings, or do you want to go over ones from? I know you did. We go over Bank of America yet?
We didn't go over Bank of America, but there is one that I did want to. There is two more that I just wanted to look at real quick.
All right, yeah, let's go over them.
So the first one is BX Blackstone, and so this one is a $90 stock, and so for me, this one is interests me for a lot of reasons, just because they hold the most assets. They have like $1 trillion under management. So for me, this one interests me a lot. And so with that being said, kind of like SPY, where we talked about earlier, that 93.56 is kind of like the stone wall, if you will. And so for me, if we did get below on earnings, 84.71, I would scalp it down to 82.73. And then if we got below 79, then I could see a world where we're at 68 real soon. So for me, Blackstone's pretty big up there, as long as with SPY that I'm watching, especially because they do have earnings before open on Thursday. And then the last one that I'm really interested in is Snap, which is after close on Thursday. And so for this one, Snap is really low. Snap is trading back at 10.95. Now, I don't think many people are going to want me to say this. However, I personally think that Snap goes to like 4 very soon. Personally, this one, maybe not 4, maybe 6. So for me, for this one, 12.50 is clearly the line in the sand. And for me, I could see this one, maybe tomorrow if we rally hard up, then this one I could see rejecting that area, breaking down. If it gets below 967, I'd probably take a short, and I could see this short going to $9, maybe $8.70.
So whenever you're like kind of scouting these out, are you just browsing earnings reports and then looking at the price of the stocks, looking at the chart? How exactly are you finding, your watch list per se?
I'm just looking at like different stocks that I've traded inside the past, and for earnings, and just ones that I know that make big moves. Because overall, like I'm looking at some of these, like let's just call it like Alaska Airlines. Okay, now I've never traded this one, and I'm sure as hell not going to make me trading this one the first time on their earnings report. You know what I mean? And then,
but don't you think stocks kind of move so differently on an earnings report that I guess if it's its first time, or are you saying you kind of want to just not be in it and see how it reacts on an earnings report for the first time? Okay.
Exactly. I want to see how it reacts for the first time on an earnings report. And so for me, like I'm really kind of chill about that. Like I don't need to play earnings for me personally. Like I like playing after earnings more than regular earnings. But that's why, I keep the setups and I'll scalp them one way or the other, because that's what I like to do. So I don't need to go like crazy with it. I kind of like just let the setups come to us, and then I go from there.
Gotcha. Okay, so I know at the beginning we kind of went over your levels and everything you had for SPY. Do you kind of want to go over your predictions for a longer term period of time? For a longer term period of time, maybe over the next 4 to 6 months, or at least till the end of the year.
Yeah. So I had talked about SPY and where I want to buy more, or where I really want to start scaling in. And so for me personally, the first spot that I'm going to scale in is going to probably be 320. Now,
that's pretty low.
That's pretty low.
We were telling them to buy at 375.
I still think, again, if you do it correctly, if you do it correctly, you buy and you continue to buy, in my opinion. That's the way that you do it.
And when we did tell them to buy at 375, it did go up to 400 since then. So it's okay.
Yeah. And we sold at 410. But I think that even if you're like a lifelong investor, etc., you can buy whenever and you can continue to buy. And I think that that's fine. but for me personally, like I'm trying to time the market, which is stupid, obviously. But I'm trying to time the market, which is not smart at all. But with that being said, I feel good about that. And after I add one or two times, then it's going to be one of those situations where I am going to wait. And because the market can go lower, like we understand that the market is down a lot this year, but it can go lower and it can continue to go lower. So I'm going to wait and be patient.
Patient for 320? That's pretty patient.
I'd like to see sub 340. I'd like to see sub 340. If I can, I'll be patient for 340 and I'll wait for that. Because I don't see a world where like buying at 400 is smart. Now, if the Fed changes their tone and they become more pro market, then I will probably scale in sooner. But for me right now,
pro market as opposed to pro economy.
Yeah, like right now, if they say like, oh, we're done raising rates, I'll buy some SPY that day.
Do you think this is kind of like, hey, we're 2 years out from an election. We're going to give time, try and fix the economy now. And if it doesn't work closer to time, we'll just go straight back to market fixing. And then we'll just bank off, be like, hey, well, look at the economy the past 6 months.
Yeah, no, they definitely have to. They definitely have to bring inflation down. And so that's why I think like we're not necessarily bottomed yet, but I think that we're close. Like I think like 320, 330 could be bottom. So like I'm not opposed to, buying soon. Like 340 from here, 340, 320 from here is not far. It's 330, so I'll meet you in the middle, is 10% down. So we're not far from it. You know what I mean?
Yeah. Why does it seem like it just keeps being moving the goalpost with what SPY might be? Is that just because of the constant Fed meetings and how, hey, we're done with inflation? Just kidding. We still got more, et cetera, et cetera.
When the Fed was talking about that they want inflation down to 2%, market boomed off that. But that's just not realistic. So we have to continue to change and adapt to the timeline. You know what I mean? And I think that's what we're seeing from the overall market right now.
And what do you think is the next kind of big macroeconomic kind of thing that's going to come up to alter the market? Do we have a Fed meeting that's important, more earnings reports? What exactly are you looking forward to?
I think it'll be earnings, in my opinion. I think it'll be earnings that does it. But on the same token, earnings can break us through this 375 and, maybe we see another test of 400. You know what I mean?
So you're saying there's just as much room up in your little scale as there is down. I mean, you say you're looking for 330, but also 400 could happen?
400 could happen, but like for my long-term accounts, I'm not ready to buy yet, personally, until the Fed changes their tune, or we just get like, again, 330, where it's like, okay, I'm buying here. Like this is too low.
And would you still you're still posting your levels every day, kind of and just as a reminder to people, what should they be looking for in those to take best advantage for like a nice trade on SPY or whatever?
Yeah, so I have no interest zones, and then I have upper zones and lower zones, and then based on those zones, I wait for confirmation, and then I take a trade either long or short to the target. And so the biggest thing is going to be not playing inside those no interest zones and just waiting to see what the market gives us and not just jumping in anything.
All right. Well, is there anything else you kind of want to go over before we leave them on their own for the week?
No, sir. I guess we'll see them on Sunday after all these earnings.
All right, guys. Well, best of luck taking care of the earnings, and we will see you on Sunday. Love you guys. Good luck trading. Peace.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.